Hello, welcome to the weekly technical analysis review for Tuesday, April the 30th. I'm Rafael Boyajian at XM.com. The pairs we're going to look at for this week are the US dollar versus the Swiss franc, the Kiwi dollar, and gold. Starting with first dollar Swiss franc, we can see that the pair is looking fairly bullish in the short term, though it has seen its momentum weaken over the past few days. The stochastics has moved away from overbought territory, is trending downwards at the moment, and the MACD histogram is above its red signal line, signaling that despite the weakening momentum, it's still looking fairly positive for the time being, at least. Immediate support is at the 123.6% Fibonacci extension of the downline from 1.0123 to 0.9894. Below that, the key supports to watch for is the 4 months high 1.0123 from back in February, and further down we've got the 61.8% Fibonacci at 1.0035. If we were to see prices head as low as the 61.8% Fibonacci or the 50% Fibonacci at 1.0008, then that would erase the positive momentum, and we could also see both the short and medium-term pictures turning more neutral. On the upside, if we do see the pair regaining its upside momentum and heading higher again, the next resistance should come at the 161.8% Fibonacci at 1.0265, and above that is the 200% Fibonacci extension at 1.0352. Let's now turn to the New Zealand dollar versus the US dollar. It's looking very positive in the short term. Stochastics are sharply trending higher. RSI is also moving higher, but hasn't quite managed to cross above the 50 neutral level yet, suggesting there is still some downside risks for the pair. We would really need to see Kiwi dollar head towards the 20-day moving average, which is the middle of the Bollinger Band. That's around 0.6705. We can see that that level has acted as support in the past and could act as a resistance this time round. Not too far above that is a 200-day moving average at 0.6720. So if the pair succeeded in clearing those hurdles, the next resistance zone would likely come from the 50-day moving average at 0.6780, and slightly above that is the 38.2% Fibonacci retracement of the downtrend from 0.7394 to 0.6423. So that's around 0.6794, and then another hurdle at the top of the Bollinger Band, which is just above the 0.68 handle. So clearing that resistance zone as well would put the Kiwi dollar on a more positive footing. However, if the Kiwi dollar fails to recover above the upper level of the Bollinger Band, it could see the current upside momentum running out of steam and turning lower again. Immediate support is at the 23.6% Fibonacci at 0.6652, and then below that we've got that 3.5 months low of 0.6580 from earlier in April. And breaching that low as well would shift the current neutral picture in the medium term to more bearish one. And finally, let's have a look at gold prices. We can see that gold has been consolidating after touching that 10-month high of 1,346.61 earlier this year. So if the gold prices continue to consolidate, it risks shifting the bullish medium-term picture to a neutral one. We can see price action is at the moment below the 50-day moving average. So the 50-day moving average is the key resistance to watch for on the upside at just around the 1,300 level, and then slightly above that is the 23.6% Fibonacci of the up leg from 1,160 to 1,346. That comes at 1,303, and clearing that resistance would set the path to rechallenge that 10 months high 1,346, and that would help gold resume its uptrend. But looking at the momentum indicators, we can see that RSI is looking fairly neutral at the moment, below the 50 level. Immediate support is at 1,275. If gold fails to regain some positive momentum and reaches below the 1,275 level, we could see gold heading towards the 50% Fibonacci at 1,253, which is near the 200-day moving average. And below that, the key support to watch for would be the 61.8% Fibonacci at 1,231. So that's it from me for today. Thank you very much for watching and have a great day.